Hey crypto enthusiasts, ever feel like you're drowning in a tidal wave of news, trying to catch every single crypto ripple while the big waves just keep on crashing? You're not alone. The world of digital assets moves at lightning speed, with breakthroughs, setbacks, regulations, and innovations hitting the headlines daily. Staying informed can feel like a full-time job, and let's be honest, you've probably got other things on your plate, like, actually navigating the crypto markets. That's where we come in. Welcome to your weekly deep dive into the most crucial crypto news, the developments that truly matter, all brought to you by Gemini. We sift through the noise, analyze the trends, and deliver you the insights you need to stay ahead of the curve, without needing a PhD in blockchain or spending 24/7 glued to your screen. Think of this as your crypto news lifeline, your weekly dose of clarity in a sometimes chaotic space. We'll break down complex topics, highlight key takeaways, and even offer some perspective on what it all might mean for your crypto journey. So, grab your favorite beverage, settle in, and let's get started. This week has been another whirlwind, hasn't it? We've seen significant movements across the board, from Bitcoin's continued dance around that key resistance level to exciting developments in the world of DeFi and the ever-evolving landscape of regulatory scrutiny. Let's unpack some of the biggest stories. First up, all eyes have been on Bitcoin. After a period of relative stability, we saw another surge in volatility, fueled by a combination of factors. On one hand, institutional adoption continues to trickle in, with more traditional financial players dipping their toes into the Bitcoin waters. We've seen announcements of new investment vehicles and increased interest from corporations looking to diversify their treasury holdings. This growing institutional interest is often seen as a strong indicator of Bitcoin's long-term potential and can inject significant capital into the market. However, this positive sentiment has been counterbalanced by ongoing macroeconomic concerns. Inflation figures, interest rate hikes by central banks, and geopolitical uncertainties continue to cast a shadow over all asset classes, including crypto. Bitcoin, despite its reputation as a decentralized and inflation-resistant asset, hasn't been immune to these broader market trends. We've witnessed how announcements regarding monetary policy can trigger significant price swings, reminding us that the crypto market, while unique, operates within the larger global economic context. Adding to the mix is the ever-present discussion around regulation. This week has seen further developments on this front, with various governments and regulatory bodies around the world issuing new guidelines and proposals. In some regions, we're seeing a push towards greater clarity and the establishment of frameworks for crypto businesses to operate within. This could ultimately lead to increased legitimacy and mainstream adoption. However, in other areas, the regulatory landscape remains uncertain, with concerns about consumer protection, financial stability, and illicit activities leading to stricter measures or even outright bans. Navigating this patchwork of regulations is a key challenge for the crypto industry, and these developments often have a direct impact on market sentiment and price action. We'll continue to track these regulatory shifts closely and bring you the most important updates. Beyond Bitcoin, the world of decentralized finance, DeFi, continues to innovate at a rapid pace. This week has seen exciting new protocols launching, advancements in cross-chain interoperability, and ongoing discussions around scalability and gas fees. DeFi's promise of open, permissionless financial services continues to attract developers and users alike, but it also comes with its own set of risks, including smart contract vulnerabilities and the potential for rug pulls. Staying informed about the latest DeFi trends and understanding the associated risks is crucial for anyone participating in this space. We've also seen significant developments in the NFT, non-fungible token, space. While the initial hype around certain collections may have cooled, the underlying technology continues to find new and innovative applications. From digital art and collectibles to ticketing, gaming, and even real-world asset tokenization, NFTs are demonstrating their versatility beyond just speculative trading. This week has highlighted some of these emerging use cases, suggesting that NFTs are evolving into a more integral part of the broader digital economy. Another key area to watch is the development of Layer 2 scaling solutions for various blockchains, particularly Ethereum. As the demand for on-chain transactions grows, these solutions aim to improve scalability, reduce transaction costs, and enhance overall network efficiency. We've seen progress in the adoption and development of technologies like rollups and sidechains, which are crucial for enabling the widespread adoption of decentralized applications. These advancements are often technical but have significant implications for the user experience and the future scalability of the entire ecosystem. Finally, the topic of security remains paramount. This week has unfortunately seen reports of further exploits and hacks within the crypto space, underscoring the importance of robust security measures for both individuals and institutions. Whether it's choosing secure wallets, being vigilant against phishing scams, or understanding the security protocols of different platforms, protecting your digital assets is non-negotiable. We'll continue to highlight security best practices and report on significant security incidents to help you stay safe in the crypto world. Now, let's zoom in on a few specific headlines that caught our attention this week. Firstly, there was the announcement from a major tech company regarding their foray into the metaverse, with plans to integrate crypto payments and NFTs into their virtual world. This move signals the growing convergence between the crypto space and the broader tech industry, potentially bringing crypto assets to a much wider audience. While details are still emerging, this development highlights the increasing recognition of crypto's potential beyond just financial applications. Secondly, we saw a significant upgrade go live on a popular smart contract platform aimed at improving its energy efficiency and reducing its carbon footprint. This move addresses growing environmental concerns surrounding blockchain technology and could pave the way for more sustainable crypto ecosystems. The successful implementation of such upgrades is crucial for the long-term viability and public perception of the industry. Thirdly, a new report was released by a leading financial institution analyzing the potential impact of central bank digital currencies, CBDCs, on the existing financial system and the role of private cryptocurrencies. This report sparked considerable debate within the crypto community, with varying perspectives on the potential benefits and risks of CBDCs and their implications for decentralized assets like Bitcoin. The ongoing discussion around CBDCs is a critical one, as it could reshape the future of money and the relationship between governments and digital currencies. With that said, thanks for watching, and until next time.